5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to episode number 500 of the Follow the Money podcast. Today's episode is entitled Markets, Money, and Empire. And I'm Jerry Robinson. I'm your host. Thanks for being with me today. This is actually our final show of the year. Hard to believe that 2025 is already over. We're moving right into the new year, right around the corner. But we have a lot to cover today, and this is one of those episodes where politics and markets and power all come colliding together. So just over the last few days, we've seen a sharp surge in cannabis stocks following President Trump's pivot on marijuana policy. We've also seen some rising rhetoric and pressure aimed once again at Venezuela, which happens to be the country that sits upon the largest proven oil reserves in the world. So markets are always paying attention to these types of signals. And in today's episode, we're going to start by unpacking what this latest cannabis stock rally really means, and also the potential rescheduling, what could lie ahead for that market, and also how Venezuela fits into the much larger geopolitical story that's tied to oil and dollar supremacy. Then in segment 2, I'll provide my signature market commentary. I'll give you my latest on the S&P 500 and gold and silver, which just hit another record high, Bitcoin, and also crude oil, which has been really volatile lately. So with all that said, let's get started. All right, let's start with the rally in the cannabis market. Over the last several days, we've seen a very sharp and sudden rally across cannabis stocks. Names that have really been dead money for years are starting to come back into the headlines. And what I want to do is I just want to briefly talk about why and what this might mean. It was basically triggered by President Trump's very public pivot on cannabis policy. Earlier this year, we learned that President Trump was planning on continuing the move that President Biden had done when he had asked for a review of the Schedule 1 classification for cannabis. Well, after President Biden lost the election in 2024, the thought was that perhaps that would be dead, and now President Trump would no longer seek to do that. But it turns out that President Trump is, in fact, moving in that direction. Trump has always been viewed as unpredictable, so it was difficult to know. But, now the president is signaling an openness to reclassifying cannabis, which would really shake up the entire industry. This would be one of the biggest events in terms of drug policy in decades, right? And so that's exactly what we're seeing here. Cannabis stocks that have been long in a bear market, many of them down 70 to 90% or so from their highs, and sentiment has completely been washed out. And now that we're getting some oxygen in the room from the White House, the expectation is that as early as this week, we could actually see the president release an executive order that would, for all intents and purposes, push the reclassification of cannabis from a Schedule 1 drug to a Schedule 3 drug, or maybe even lower, but it seems like they're going to move it to Schedule 3. And so what are some of the immediate effects of that? Well, first of all, cannabis would no longer be treated as having no medical value. You see, when you have a substance that's a Schedule 1 according to the FDA scheduling, there's just no medical value there, which is kind of ironic because we have all of these medical marijuana programs all around the country. So too, you would also see a softening overnight of the federal posture towards the cannabis industry. And that, of course, would lead to, I think, massive shift in sentiment across, public cannabis stocks. So what we expect is that Trump's executive order, which is very likely coming this week. I've been following this space for a long time, so I've told our members that I'm just, kind of got to show me. I've got to see it happen. We'll see if it does happen, but here's what we believe, that if Trump does do this, that he will sign an executive order that could basically instruct the DOJ and the HHS to fast track moving cannabis from Schedule 1 to Schedule 3. And if cannabis is indeed moved to Schedule 3, that means that the heavy, burdensome tax that lays upon many of these cannabis companies would no longer apply. That's in the IRS code. It's Section 280E. And this would automatically allow cannabis companies to deduct normal business expenses. That would cause a rise in profitability. And then many companies would be able to flip from losses to profits, at least on paper. And so that's why many of these stocks, which are very much suppressed in price, could really rally sharply, especially once it becomes certain. Also, an executive order would basically provide some reduced fear of federal raids or prosecutions, right? And state-based, operators in the space could really get some breathing room there. Even without new laws, the change in enforcement could also happen, so that federal enforcement could shift. Trump could also direct federal banking regulators to ease restrictions for cannabis-related accounts. Right now, companies in the space aren't able to have access to the banking system the way a normal bank does. There is the Safe Banking Act, which we've been hearing about for some time. Trump couldn't really fully replace the Safe Banking Act, but it would help immediately in helping companies. Also, many of these companies cannot, that are publicly listed, these cannabis stocks, they can't automatically uplist, right? So they can't uplist to like a major market exchange. They have to mainly stay on the over-the-counter markets. And so, again, with this kind of executive order, it could begin to raise expectations for some of these companies to actually get listed on a major stock market exchange. And that could also lead to a surge in institutional interest, just higher liquidity in general, and maybe even begin to see expanded ETF eligibility for some of these companies as well. But let me also be clear that, these the changes that this executive order would make will not include things like, full federal legalization. It's not going to make cannabis legal at the federal level. It's just going to provide a lot more clarity, and it'll also allow medical research to go forward, because a substance that is Schedule 1 on the FDA is just considered of no medical value. And so it makes it difficult to do any kind of medical research into it and get funded for that. So when we get a lowering of it and moving down to, like, say, a Schedule 3, that's going to allow a lot more medical research to happen, and that could really help the space overall. Another thing that's not immediately going to happen is you're not going to have, criminal justice updates. Sadly, so many people are sitting in jail or in prison for years and years for growing a plant. And unfortunately, this particular executive order isn't really going to deal with that head on. So that's another area that we often think about. I mean, a rally in the market is great, but it doesn't equal reform, right? So when you look at the politics around cannabis, it's been a long history of dangling hope without delivering really any outcomes. And so anyway, interesting development there. I actually own 3 cannabis stocks, and I've been talking to our members about them. In fact, I just did a big update on our latest Trends and Profits webcast on Tuesday of this week. I shared those 3 stocks that our members have known about those for a long time. But you can actually, if you're a member, you can go see the stocks that I actually own. We have courses we've done on this space. We find it to be a very interesting space, and I think that we could have a big, big rally. Now, at the beginning of the year in 2025, I had mentioned that cannabis stocks were one of the areas that I expected to beat the market in 2025. And we really were underperforming the broader market until here toward the end of the year. So it may be that here at the very end of the year, we're going to cross the finish line and we'll see cannabis stocks in a in a much higher place than they began at the beginning of the year. So we'll just have to see about that. Now, again, if you want to know what stocks I'm invested in that space, become a member. Followthemoney.com/join. I alert our members anytime I add a new stock, anytime I sell a stock in my long-term investment portfolio. And every week, we do dollar cost average into our favorite stocks and digital assets, and we share that with our members through Twitter, through our private Twitter feed, through email, real-time emails, and then also in our reports and whatnot. So there's a quick update on the cannabis space. We may get an executive order this week, and if we do, it's going to be really big news. It'll be one of the biggest updates in the space that we've seen in decades. So we are watching that space closely. Another space that we're watching closely, and I want to widen out the lens here a little bit, because this same pattern shows up in a more serious and more dangerous place, and that's Venezuela. So in recent weeks, we have been seeing rising rhetoric and pressure aimed once again at Venezuela, which has been facing sanctions and threats. This political language is very familiar if you've studied U.S. foreign policy over the last century, especially in Central America and South America. The United States does not have a good track record in these areas. And I want to be careful here because Venezuela is usually discussed in highly simplistic terms. Usually you hear that Venezuela has a bad government, or it's a failed state, or it's a socialist disaster. Maduro, in many ways is an illegitimate leader. But that framing really misses, I think, the larger reality, which has to do with the fact that Venezuela holds the largest proven oil reserves in the world, right? Larger than Saudi Arabia, larger than anybody. And oil, of course, a major energy economy. It's a monetary asset as well. It's been one of the primary pillars supporting dollar dominance for decades. The petrodollar system, which I've written about extensively here at Follow the Money, also in our book, Bankruptcy of Our Nation. Petrodollar system didn't happen overnight. Of course, it was engineered, where we had oil priced in dollars that created that permanent global demand for the U.S. currency and gave a permission slip to the Federal Reserve to print money at will and for us to basically monetize our debt. And that system has been cracking for years. Countries obviously have been de-dollarizing. They're trading energy outside the dollar, and sanctions have accelerated that shift. And you're just seeing shifting alliances right now. So the U.S., as I mentioned, has this long and troubled history of intervening in Latin America with regime changes and covert operations and all kinds of nasty CIA operations and economic pressure that's usually dressed up in some sort of moral concern language. So when we see Venezuela in the headlines, we realize that we could be heading right towards another petrodollar war, another forever war, right? And this is one of the biggest concerns I have right now, is that Venezuela and the United States are going to have some sort of hot war. And I don't like the language that I'm hearing coming out of the White House here. It's making me a little concerned that that's where we're heading. This has all the same vibes of the build-up to the Iraq War or to the build-up to the Afghanistan War. It has that same kind of vibe to me. We've lived through so many of these oil wars that you can just kind of tell when you're seeing one, right? So that's what I'm looking at with Venezuela. Pretty concerned about this. I'm actually writing a special report on it right now to alert our members as to what we're seeing and what we expect. Of course, I don't want to get in the weeds with all of the latest headlines about Venezuela, but we do want to be watching that space because I do think this could become something that we don't want it to become. And it could be for political expediency. It could be we have an election around the corner. It could be a way to take our eyes off of other things or distract the American people. And so it's important to understand where we're at this moment as we head into the end of 2025. I mean, markets are really being whipsawed right now by politics and headlines and fear. You've got cannabis stocks surging, you got oil tensions rising, you got a war being threatened. And so, it's important to pay attention to what's happening. We have all this volatility here. But of course, volatility creates opportunity, but only for those who are paying attention. And this is why I constantly warn against chasing those big green candles and that FOMO, especially in politically driven moves. That's my concern also about the cannabis play, is that if we don't actually get an executive order, if this is just a bunch of talk, then some of these stocks could deflate in a very quick manner. So the rallies can be fast and violent to the upside, but they can also reverse just as quickly. And so in moments like this, your job is not to predict the outcome. Your job is to manage risk. And so that's exactly why in the next segment, I'm going to step back from the politics of all this. I'm going to give you a more clear-eyed look at the markets themselves, where the trends are, where the risks are, and what actually matters right now. So we're going to talk about some of the different markets. We'll look at the S&P and gold and silver and Bitcoin and crude oil on the other side of this break. Hold tight.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the Follow the Money podcast. I want to turn to the markets now, strip away the noise. I want to start with the S&P 500, which is still in a major uptrend. Right now, as we sit here toward the end of the year, the S&P 500 ETF, the SPDR, SPY, is up 15.7%, almost 16% year to date. That's a very respectable return so far for the year. And the broader market just continues to hold up better than many people had expected, especially given how loud the headlines have been. We are seeing some rotation underneath the surface. We've seen a lot of rotation into healthcare recently, but we're not seeing like wholesale distribution. Some areas have been cooling, others are quietly attracting capital. But this is really the kind of typical behavior you would expect in a mature bull market, and that's where we're at. Earnings have been stellar in this earnings season. Balance sheets overall have been holding up very well. So, this is not just a market that's driven completely and purely by speculation around AI. We have seen volatility rise a bit, but the uptrend just literally remains intact. When I look at the S&P 500, the key area I'm watching right now is around the 6,400 level or so. That's a key area I would want to see us hold. Right now, we're just pulling back below the 50-day moving average intraday during the recording of this broadcast. Doesn't mean we'll close there, but that 50-day moving average is important as well. But I'd like to see the 6,400 area or so hold in the event we do get a broader pullback. But, around 62% of stocks in the S&P are trading above their 200-day moving average. So overall, things are looking pretty good. It's the same thing with the NASDAQ 100. NASDAQ 100 recently breaching below its 50-day moving average. That's a key area we like to watch. But overall, that still looks pretty good too. The outflows have not come on dramatically heavy volume, although we have had some weakness there. Okay, now I want to talk about gold and silver. We'll begin with gold. Gold's been strong. Silver's been even stronger as of late. Silver recently pushed to a fresh all-time high. We got to $66 I saw in today's price action. We'll see if we actually close above that area. But, we're not just seeing retail speculation here. Certainly we've seen retail investors come in, but this has been a lot of institutional participation. We've seen it in gold for quite some time. We've had almost parabolic price moves in gold. We ran into some resistance, in the fall with gold around 43.80. It pulled back, but now it's trying to make another run at that area. As we speak, we're sitting at about 43.68. So, we're very close to a fresh all-time closing high on gold. And right now, the key area that we're watching there on gold would be around that 50-day moving average. If you can believe it or not, we haven't touched that 50-day moving average since August. So this rally has just been simply incredible on gold. Now, turning to silver, as I had mentioned, silver tends to lag and then overtake late in the precious metal cycles. And that's what we're seeing now. We're seeing that silver is really taking off in this current environment. But of course, right now, when you look at silver, it's sitting at I'm just checking it right now, it's about 66.50 as we speak. So, literally just smashing above its former $50 high not too long ago, and now just continuing to power higher. And so silver, looking really strong on the charts. The problem is that it's gone parabolic. We've had 1, 2, 3, 4, 5, 6, 7, 8. This would be the 8th monthly green candle. You have 8 monthly gains. That is just rare. Even for silver in its rallies in the past, even if you go back to say 2011, 2010, you didn't have that many in a row. You would typically get a couple of months where you would cool off. So we haven't seen that with silver. I would expect we are going to see a cooling off of this rally in silver. And when you look at it, of course, it's overbought. On the monthly chart, it's overbought on the weekly chart. So pullbacks would be entirely healthy here. Consolidation below its recent high would be normal. And long term, I remain constructive on precious metals, especially as we head into the new year. I just continue to see them as a primary beneficiary of poor monetary and fiscal policies. It's certainly a hedge against currency debasement and even just the policy uncertainty that we've been living through. Year to date, silver is up around 130% now that I look at it to see what it is lately. So with this latest move, it's up 130% or so. Really impressive. If you look at, say, something like gold, gold's up around 65%. So we've really risen nicely in 2025, and we think there's more upside as we head into 2026. By the way, I'm going to be unveiling our brand new 2026 market outlook and economic outlook at the beginning of the year. All of our members will be getting that. I'll also be reviewing how our 2025 outlook turned out. In fact, on our next broadcast, I'll probably be digging into that. I'll be be reviewing our 2025 outlook and then talking about a little bit of the things we're looking forward to in 2026. I'll share a few of those ideas. Members will get all of those ideas. So stay tuned for that. Now, I also want to talk about Bitcoin, but let me talk about oil first, because oil has been very erratic and it's been coming down very sharply. We just hit a 5-year low on the price of oil. If you look at, say, West Texas Intermediate, it's currently trading at around $56. And, in fact, yesterday it was about $55. And you have to go all the way back, to 2020. Was last time we saw this. It was pretty late in the year of 2020 where we were at this price. So overall, that's good news when you think about the pressure, the downside pressure it's been putting on, prices. Crude oil, obviously, just a huge input for pretty much all, complete or finished goods. And so the oil markets are really being pulled in two directions. You got slowing global growth on one hand, and then you got rising geopolitical risk on the other, with Venezuela sitting right there in the middle of that tension. And of course, oil is not just a supply and demand commodity that's just focused upon that. It's obviously a very political commodity as well. And that's why oil rarely behaves in a real clean way on the charts. It tends to be erratic, especially whenever things are happening like they are right now. Now, let me turn to And by the way, one more comment on oil before I move on. I want to move on to Bitcoin, but Brent crude is down to around 59 as we speak, 59 or 60. And again, that area hasn't been hit since that same time frame back in late 2020. So whether it's Brent crude or whether it's West Texas Intermediate, we're seeing lots of pressure to the downside on that commodity. Now, let's also turn to Bitcoin, which, has been weak relative to expectations, certainly in 2025. I had higher expectations for Bitcoin to do well. I certainly expected it to beat the S&P 500 this year. This is that fourth year of the cycle where it tends to do well. And we just really didn't see the kind of rally that is often associated with that fourth year of the cycle. And that's frustrating for many investors, especially after such strong optimism as we headed into the year. But, oftentimes we can look at these things and realize that weakness doesn't mean that the asset has failed. It's really just kind of digesting and consolidating amid lots of uncertainty, but also relative weakness in the economy, right? Not a lot of expansion in the manufacturing base. Our manufacturing has been contracting here in the United States. The output activity has been contracting for months and months and months. And Bitcoin does tend to move with that, along with the liquidity, the liquidity cycle. We just got at the end here of one of the largest deleveraging events in central bank history, with the Fed, slashing its balance sheet by about $2.5 trillion. It was a huge event that kind of kicked off back in 2022. That's when the quantitative tightening, or they call it QT, began. And that just ended in December of 2025. So we just ended that. And the Fed just turned right back around now and started raising its balance sheet. It's starting to add to its balance sheet. That is bullish for assets like Bitcoin and for gold and silver as well. So we are watching that. Also, we've been seeing a lot of adoption in 2025, despite the fact the price hasn't broken out to a fresh high recently. We're continuing to see adoption grow institutionally for sure. Bank of America, as I recently had mentioned, is now recommending a digital asset allocation for wealth clients in the range of, say, 1% to 4%. That's huge. We've been advocating 5% as an allocation for Bitcoin on this broadcast for years and years. So it's really cool to see that wealth clients are getting that kind of advice from Bank of America. Vanguard's allowing crypto ETFs on their platform. That matters, of course, as well. That's a big shift. So I continue to hold Bitcoin as a long-term asset. I don't chase it. I do not leverage it. I keep it in cold storage. I add to it. I expect volatility. I think if you don't expect volatility with that asset, then you've got the wrong mindset when it comes to Bitcoin. And there are a few other cryptocurrencies that I'm going to be talking more about with our members here. I'm going to save my comments on Ethereum and then some of the other projects that we like to invest in. But I'm going to be talking about those, especially in our upcoming report for all of our members. So be on the lookout for that. Before I wrap up this segment, though, I want to just briefly mention something important. If you're trying to navigate markets like this without a rules-based approach, it can be very exhausting and expensive because you can lose money in the process. That's why we teach strategies here at followthemoney.com. In fact, we're going through right now our position trading mastery course. It's designed for environments exactly like this. We're focused upon trends, upon how to manage risk, how to focus upon confirming a trend before you actually enter. We talk about creative entry strategies and discipline and all of that. You don't need to trade everything. You just need to trade the right things the right way. And our brand new position trading mastery course, it's a 10-module course. We're a little more than halfway through it now. We're doing a new module each week, is available on our website. You can go watch on demand the first 6 modules. They're already there. I encourage you, if you're a member, to go check it out. If you're not a member, go over to followthemoney.com/join, choose your plan, and I'll see you on the other side. All right, friends, well, we're going to head into our final break here. We'll come back with our final segment, and we'll bring it all together, leave you with a reminder that matters now more than ever. Stay with me. All right, friends, welcome back to the final moments of today's broadcast. It's been a great show today. We talked about the markets. We talked a little bit about politics and power and money and, of course, the shifts in the cannabis policy potentially coming up this week. We talked about Venezuela and the oil story there. Obviously, underneath all of that are real people being affected by decisions made far away from them. Now, obviously, markets matter and economics matters, but they're not the whole story. It's easy to talk about countries like Venezuela in abstract terms, to talk about barrels of oil and the petrodollar system and all the strategic interests and all the money flows. But behind every headline are real human beings, right? Families and workers and children, people who are made in the image of God. And that's why I want to leave you today with a provocative thought. And in just a moment, you're going to hear an audio clip from Representative James Tallarico from Texas. He's going to remind us of something that Scripture makes very clear, but that's often forgotten in political and economic debates. Let's roll the tape.
Do you know people who love Jesus and don't seem to love anyone else? That kind of religion that says you can treat people however you want as long as you have a personal relationship with Jesus is an abomination. It is a cancer on the body of Christ. Scripture says you can't love God and hate other people. You can't love God and abuse the immigrant. You can't love God and bully the outcast. You can't love God and oppress the poor. We spend so much time looking for God out there that we miss God in the person sitting right next to us, in that neighbor who bears the divine image. In the face of a neighbor, we glimpse the face of God.
I think that that's a word that's worth sitting with, especially in times like these. So I'll leave you with that, and that is just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous rest of your 2025, and we'll see you right back here at the beginning of 2026. Until then, God bless.
Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.